The financial sector is concerned about the inevitable collapse of Silicon Valley Bank. As one of the largest lenders to the tech industry, its insecurity threatens not only the Silicon Valley ecosystem, but also the world economy. In this video, we'll look at the causes behind the bank's fragile status and the potentially global repercussions of its failure, and how likely are going to face the recession in 2023. Silicon Valley Bank, or SVB in the United States, went bankrupt unexpectedly in March 2023. The California lender's failure was the biggest bank failure since the financial crisis of 2008, and it sent shockwaves through the world's financial markets. Regional banks in the US were put under a lot of pressure as customers and investors became more worried about the health of other banks. Silicon Valley Bank was a state-chartered commercial bank with its headquarters in Santa Clara, California. It closed on March 10, 2023, and the Federal Deposit Insurance Corporation is now in charge of its asset, FDIC. SVB was the largest bank in Silicon Valley and the 16th largest bank in the United States. SVB had offices in both Massachusetts and California. The bank was the main business of SVB Financial Group, which is a publicly traded bank holding company. Other subsidiaries of SVB Financial Group ran offices in 13 other U.S. states and in more than a dozen countries outside the U.S. SVB, which had become the go-to bank for almost half of all venture-backed tech startups, went out of business after a run on its deposits, which was caused by a series of interest rate hikes backed by the central bank during the global inflation surge. In the second largest bank failure in the U.S. history, the California Department of Financial Protection and Innovation, or DFPI, which was in charge of the bank, took it over and gave it to the FDIC to run. So how did everything went into collapse? The UK Treasury said on March 13th that HSBC bought the UK branch of SVB for just £1 or $1.21. This is one way that financial centers around the world are trying to protect themselves from the fallout of the bank's multi-billion-dollar failure. Just days before the UK rescue sale, regulators in California shut down a commercial bank that startups liked. This was the second largest bank failure in U.S. history. It was quickly followed by the failure of Signature Bank, which specialized in cryptocurrencies and closed on Sunday, March 12th. Neither bank was big enough to take part in the Federal Reserve's stress tests, and neither met the criteria for being considered systematically important. SVB CEO Greg Becker had pushed to raise that criterion, but at least in the case of SVB, the bank's failure was felt in all the countries where it did business. So, who has been affected by the failure of Silicon Valley Bank? SVB is based in Santa Clara, California, but it has offices in Canada, China, Denmark, Germany, India, Israel, Sweden, and the UK. It's still not clear how many people were exposed and how much damage was done, but different governments started to look into the situation over the weekend. The Toronto ad tech company Equity Ads said that almost all of its cash, about $55 million worth, was in SVB. Benjamin Netanyahu, who's the Prime Minister of Israel, has promised to take a look at the damage. Globes, a business newspaper in the United States, said that SVB's failure was like cutting off the oxygen pipe to the Israeli tech industry, which is closely connected to Silicon Valley. One of them is BeiGene, one of the most important companies in China working on cancer treatments. It recently said that SVB has frozen nearly 4% of its cash, or about $175 million. SPT Silicon Valley Bank, which is a joint venture between SVB and a Chinese bank, said in a statement over the weekend that its business is stable and independent. In the meantime, other startups are looking for alternatives to banks. According to a report by Reuters, about 16 tech and life sciences companies in Europe owed about $120 million to SVB. EU analysts say there isn't much risk for the banks in the Eurozone, but the markets are still falling. By the numbers, £1 or $1.21 is how much HSBC paid to buy SVB's UK branch. At the time of its collapse, SVB had assets worth $209 billion. As of February 28th this year, SVB had $165 billion in deposits. Bloomberg says that 190 firms that have business with SVB could be looking for new lenders. The looming threat of cash flow problems in the tech industry around the world. Gary Tan, president and CEO of Y Combinator, said in a March 10th tweet, 30% of YC companies exposed through SVB can't make payroll in the next 30 days. So here's a short history in chronological order of what happened to Silicon Valley Bank. On March 9th, SVB stock falls 60%, which equals a loss of $80 billion. On March 10th, California shuts down SVB and gives it to the Federal Deposit Insurance Company to run, or FDIC. On March 12th, U.S. regulators say that by March 13th, depositors will be able to get their money, even if it's more than the $250,000 insurance limit. Janet Yellen, who's in charge of the U.S. Treasury, says that SVB will not get a bailout. And on March 13th, the UK government and the Bank of England announced that SVB's UK unit will be sold to HSBC. Secretary of the Treasury Janet L. Yellen, Federal Reserve Chairman Jerome H. Powell, and FDIC Chairman Martin J. Grunberg all said in a statement on March 12, 2023, that all SVB depositors would be fully protected and able to access all of their money starting the next Monday, March 13th. That day, the new successor Silicon Valley Bridge Bank, N.A., which was run by the FDIC, started doing business and took over the ongoing business. Is there a possibility of greater economic contagion, even a recession? David Bassanis, who's the chief economist at BetaShare, says that the failure of Silicon Valley Bank could lead to a recession in the U.S. If that happens, the Federal Reserve and the Reserve Bank would have to stop raising rates so quickly. He also says that the collapse raises the question of how many other smaller banks also have big paper losses and are therefore vulnerable to a run on deposits from people who aren't covered by insurance. Even though depositors are safe, he says investors may still panic, and it's likely that more banks will fail. It's hard to believe there aren't a few more SVBs out there somewhere, especially since so many more analysts will be looking for them now. Many of these banks may fail or not be able to lend. The bond portfolios of these banks have a lot of unrealized losses, and technically, they could go bankrupt if they had to sell those bonds at market value. He says this is how a disorder can spread. The regulators protected depositors, but they haven't protected shareholders, and that's the problem. They should, but they haven't. Bassini says that even though this collapse is different from the collapses of major investment banks during the GFC, credit conditions may still freeze up businesses' access to credit, which could cause a big drop in confidence. According to him, even if you think the banks won't go bankrupt, you might still take your money out because you're afraid you won't be able to get it as easily as you want. If that happens, he says, it'll lead to a hard landing for the U.S. economy, which would affect Australia in the same way that a U.S. recession would affect Australia. Every time the U.S. has had a recession in the past, we have also had one. He says that even though the technical definition of a recession in Australia is 2 quarters of negative economic growth, a rise in the unemployment rate of at least 1.5% would cause big problems. We already have our own problems like high inflation, the RBA raising interest rates, and slowing growth. We don't want a U.S. recession at all. Shane Oliver, who's in charge of investment strategy at AMP Capital, says the market is still jittery. It turns out to be a storm in a teacup, and it's over in a week. The next week, the Fed will go back to doing what it does, which is looking at data and thinking about a 25 or 50 basis point increase in rates, he says. If there's still reverberations, it would be hard to raise rates by 50 basis points, even if CPI and retail sales numbers support it. Oliver says that the effects of these bank failures will take time to play out. The probable failure of Silicon Valley Bank serves as a reminder of the global financial system's vulnerability and the importance of responsible investing. The repercussions of its failure might be far-reaching, ranging from employment losses to a bigger economic disaster. It's time for authorities and investors to take action to avoid a worst-case scenario and secure the tech industry's long-term viability. Thank you for watching, and stay tuned for more updates.